ESG throughout the LISW week. And we've got a really interesting panel with us today, which I think is really going to explore whether the marine insurance market has a responsibility in terms of changing behaviour in the context of ESG. I think it's a really interesting question. I think there's a lot going on in the market at the moment. And I'm going to hand over to Nick Shaw, who's going to be moderating this session, to take it from there. So, Nick, thanks very much.
Thank you, Joss, and good afternoon, everyone. Just a few logistical issues before we kick off. We have an hour and 15 minutes for this session, and if you have questions from the virtual audience, please could you go to the conference area on the site, and under Q&A, if you could post the questions there, then I will try and monitor those and bring them to the panel's attention at the end of the session. I'm delighted today to be joined on this panel by some very eminent thinkers in this area. On my left, I have Patricia Kern, who is Head of Marine at Swiss Re, and is also recently appointed to the advisory board at Lloyd's Register. I have Sundeep Kira on the far left, who's Global Head of Hull and Head of Marine UK at AXA XL since 1st of July this year, and previously was in Singapore. He's also a master mariner and spent many years at sea before he came ashore. So perhaps better versed than some of the rest of the panel in terms of what actually happens at sea. I have James Bean at the far end, two down, who is Managing Director of Standard UK. And beyond him is Magna Nielsen, who is Managing Director and Chief Underwriting Officer at Guard UK. And finally, but not least, Michael Parker, who's a well-known panelist on this topic, who is Chairman, Group Shipping, Logistics and Offshore at Citigroup, and has had 34 years involvement with ship finance, and was chair of the drafting committee of the Poseidon Principles. Just before I hand over to each of the panelists, just to give a few opening remarks on their company's approach to ESG, I thought I'd just focus on a few topics. Decarbonisation is obviously high on everyone's list this week. UK Gov came out yesterday asking the IMO to look again at their targets for decarbonisation, seeking to get to zero increase instead of 50% decrease by 2050. We've also had Maersk come out asking that new vessels not be allowed to burn the traditional fuels from the past, and other pressure groups putting real pressure on the maritime industry to do more in the decarbonisation space. But ESG is not just about decarbonisation. There's also a lot of other things that are going on in order for us to ensure that there is a sustainable shipping industry going forward. And today's session is really to try to explore marine insurance's place and what marine insurers should be doing to ensure that there is a sustainable shipping industry going forward. Just at the international group, what's our approach been? We have a sustainability committee looking at what our performance has been like so far, where we are missing things and where there are gaps. But we are very keen to ensure that there is P&I cover available for ship owners who are our ultimate stakeholders, and try to be as inclusive as possible and help ship owners on the journey towards the new fuels and where that may lead us going forward. So presently we're engaged in a materiality assessment looking at key areas where we can make a difference, things like casualty response, ensuring high levels of cover so that legitimate claimants can make sure that they have monies which they can recover against. It's that type of issue that we are grappling with, and I'm sure that each of the other organisations in the panel are doing similar processes. So perhaps first I could turn to you, Patricia, just to make a few opening comments. Thank you.
I have the privilege of working for a company that virtually invented the term sustainability, because Swiss Re released the first sustainability report in 1979, when I think most of the people were not even familiar with this concept. This has got a lot to do with our Swiss DNA, and now 40 and more years down the road, Swiss Re ambition is to be a leading voice in the discussion around sustainability in the insurance industry. Recently, our group CEO, Christian Mummelthaler, has been one of the founder, together with AXA, of the Net Insurance Alliance, and it's about giving transparency on the emission of our underwriting portfolio. Shipping, the emission produced by the shipping industry count for 6% of global emission. These are the same emission of Germany as a country. If we, as a community, want to reach the goal of the 50% reduction, there is something that needs to be done. And we, as insurance industry, we need to play a role in it.
Thank you, Patricia. Cindy, perhaps I can hand over to you next.
Yeah, thanks, Nick. I'll start with the recent Global Risk Survey report, which was commissioned by Marsh and the World Economic Forum, where they identified the newest and the most emerging risks which are going to impact the maritime industry in the next 10 years. And climate change and no action by industries like the maritime industry are going to be a key part going forward. So that's why it's very important for each one of us to act right now, rather than it being too late for something to say for our children. In terms of access strategy, our ambition is to have a peer-to-partner strategy where we are trying to partner with our clients, rather than putting a hard stop and saying we're not going to insure fuel-burning vessels. We want to transition. We want to partner with engine developers on the innovative technologies which are coming out in the market. And that's how it's more of partnering rather than just paying off claims as an underwriter.
Thank you, Cindy. Magna, perhaps I could pass to you next.
Well, yeah, thank you, Nick. I'm not disputing Patricia saying that Swiss reinvented sustainability, not at all. But being a P&I insurer, we have been involved in what we can call ESG, basically since we started, as we have been dealing with people claims, we have been dealing with pollution, and we have been dealing with wreck removals, for instance. So, but in order for us to progress, we feel that what is important is along the lines of what AXA is saying, that we need to have an active dialogue, not only with our clients and members, but also with prospects, with brokers, regulators, and not least colleagues. Because we need to actively find information from them. We need to come up with initiatives. We need to build, let's say, create motivation for change that lasts. But again, being an insurer, we also must understand and see our place in the hierarchy. We are not necessarily here to drive technology forward, but we are here to support the development of technology by being the ones that the risk is transferred to. Because at the end of the day, insurance is about managing risk and consequences, and not necessarily being a facility for funding research and development. But having said so, we have a voice in it, and we must use that to influence and to push everybody in the direction we feel is right. And one way of doing it is obviously to find ESG criteria and have the criteria find its natural way into the modeling we do, and also the analytical evaluation. And another thing which is quite important as well, and that is the competence and the skill set. I mean, we are where we are, and we need to build competence in these ESG matters, because we have to let ESG criteria find its way into the way we select members and clients as well, and the way they select us, not the least. And in order to do so, we must understand not only the questions we get back, the answers we get back, but we also need to understand the questions we ask. So, and having done all of that, I believe it's all about communicating this properly, or communicating properly, because There's an awful lot of people out there who have a meaning, and we need to be able to explain why we have done what we have and why we have not done what we have. Because at the end of the day, there's a lot of regulators out there that will need these kind of communication, and also our clients again. So I believe that was what I had to start with now.
Okay, thank you. James.
Thank you, Nick. Well, I think the first two panelists put forward very good reasons why we're all here today. And then Magnus followed on with his viewpoint. And I think I share much of what he has to say. But I think from the standard club's perspective, I think that what we do is like simplify it down to sort of first principles. The mutual P&I clubs are owned by their ship-owning members. We're very much part of the shipping industry, and we're not detached from it the same way as arguably commercial insurers or the financiers are. P&I clubs have one thing, and that's to provide their members with the cover they need to trade their ships. And P&I clubs are representatives of their ship owners. At the Standard Club, we have ship owners, multinationals who have hundreds of ships, through to Mar and Par operations who have one. Within that spectrum, you've got a broad range of ships that are operating and trading around the world. And it's the Standard Club's role to support and facilitate their members going about their business, but ultimately providing them with the cover and protection that society demands of them to respond to and deal with the claims that inevitably arise through operation of ships. So where we see our position is very much standing shoulder to shoulder with our members as they come to grips with ESG, and as they take about the transition towards decarbonisation. We need to be there to support their needs, whilst at the same time, as an insurer, understanding the challenging environment which they're operating and working with them as they adopt to new technologies to ensure that we can continue to provide the insurance that they need going forward, as I say, so that we can react to the inevitable incidents that will arise as new technology is adopted, as new technology is tested and tried. And it's in society's interest that the clubs take the same stance. So one of the things I'd like to also add to that is that P&I clubs have always found ways to adapt. We've always found ways to go the extra mile for our ship-owning members. Sustainability is very much clearly an important topic for them to come to grips with, but I don't see any reason why the clubs won't continue to do so. Not doing so, not supporting their members, can only be detrimental to the environment. So it is about cooperation, it's about working together, but from a club's perspective, it's about supporting and assisting the members who are ultimately the club, who are the insured.
Thank you, James. And Michael, perhaps a few opening comments for you as well.
Well, I was thinking this is only the second time in 16 years that I've been invited to address an audience of the marine insurance sector. In 2005, Simon Stonehouse persuaded me to speak to the IUMI conference in Amsterdam, I think it was, on how shipping bankers were looking at the industry. And it was obvious sort of afterwards in the corridors that we were ships passing in the night. That shipping finance and insurance, we have the same clients, and as you say, your clients are sort of also your owners. And I also remember it was the night before was when Chancellor Merkel was first elected, and so it's nice to be bookending, her several terms in office. I think you're all too polite, if I can put it that way, but that's fine, because in the banking sector we've been doing this for longer, in the sense of longer addressing this issue, because partly our institutions are under pressure from our regulators and our shareholders. And it started with coal some time ago, guns, all the other sort of sin stuff. And so, but the other reason Poseidon Principles in shipping finance also got underway is because banks are the primary providers of capital. And so we can decide who our clients are as individual banks, and Poseidon Principles is very much not anti-competitive. And so we can choose where we want to put our capital, because as is going to happen very rapidly, our Scope 3 emissions in all our portfolios are our Scope 3 emissions for our net zero by 2050 commitment. So we can either act sooner or later. And of course, we are now about to report for the second year, and that's evolving, and we're learning from the actual results what's actually happening in the world around emissions. But I think what why I don't think it is ships passing the night anymore is because this one issue is the main issue affecting the physical planet and the global economy. So it's going to drive investment, it's going to drive regulation, and therefore within the context of shipping, and as shipping also moves to be more about the cargo than the ship, it's going to sort of have an effect, I think, on how we all together and separately sort of view the industry. One of the when we launched the Getting to Zero Coalition in New York 2 years ago, it was the same day that Mr. Trump and Greta Thunberg met in the lobby, or rather didn't quite meet in the lobby, and there's that picture of Greta Thunberg looking aghast and shocked that she was in the same airspace as President Trump. When we launched that to get zero emission vessels on the water by 2030, it was sort of, at that point, we thought it was slightly idealistic, but the Secretary General of the UN, closing of the week, said that he felt that what we had done there was one of the most important contributions any industry had made to this path. Next week, and it's not official till it's official, which will be Wednesday, Getting to Zero Coalition which has over 140 members and supported by 14 governments. We're launching a call to action to, in effect, COP26, but to get the IMO to do what the UK and the US and others have done, which is to go to a zero ambition, although unlike the UK, there's bound to be some net in there just simply because of certain issues and offsets. And we currently at 140 plus signatures, and included in that are most of the world's non-Chinese major ship owners. So from Japan, from the US, from all over Europe, including some of the leading Greeks. And I think this is where two things are important, then I'll stop. The first is, the great thing for us is we don't lend against a ship if it's not insured, or rather, if it's not insured, we want the money back. And of course, a port won't let a ship in or let it sail if it's not insured. So the insurance industry has a huge opportunity and responsibility to influence this for all of us, because if the ship can't sail, insuring the cargo doesn't make a difference either, because the cargo will just sit on the ship. And I think the coming together of that is important. The other thing we launched a year ago, the GMF Summit, was the Sea Cargo Charter. So we launched, they're all members, I think, of the Getting to Zero Coalition, which is the commodity companies saying, again, rather like banks, but saying, we want to see the environmental performance of the ships we charter. Now, that will be both long-term and short-term. They're using voyage emissions over a calendar year in order to assess. So immediately, even before EEXI and CII and stuff, the major cargo owners are going to make commercial decisions based on those ship owners' performance. We just saw an announcement a couple of days ago about the big US consumer companies, including Amazon, coming together to, in effect, do something very similar for the container market. So the reason I said you're being sort of polite is we've stopped being polite in the other sectors. We've started sort of moving forward, and I appreciate for all of us, particularly I think in the P&I sense, when your sort of members are the ship owners, it's a sort of sensitive topic. But I suppose what I feel is that the shipping industry and who owns the ships are going to be defined by how they look at this subject. So the P&I membership will shrink dramatically in the sense that those companies that don't perform will no longer be in the industry. The industry is going to change dramatically over the next few years. And I think you can help influence that. But I agree with you that we all need to support our clients and encourage them. So the Poseidon Principles is not designed to punish. It's a partnership. I have to stress the drafting committee had ship owners on it, and Lloyd's and UMass and Energy Transition Commission. So we wanted something to be a partnership between owners and lenders so that we do this together. But obviously amongst, it's the forward-thinking lenders that participated. One of them told me, he was accused afterwards, why did you join this? How did you sort of let them get away with it and stuff? And he said, it's the way the world is going, and so, get on with it. So I appreciate that your industry does things differently and has a different approach, but you are key to the overall process. Now, the reason why if you do something, we're doing something, and through things like the Sea Cargo Charter, the cargo owners do something, that is where all the money is in shipping. And that's what's key, because investors in you, or investors, if you like, in us, are really asking for those standards to be raised in everything we do. And so, you know, if we don't do it, someone will tell us to do it, or we'll be out of business ourselves.
Thank you very much, Michael. I mean, it's very useful to hear your views and how you have taken the banking industry or helped them through the Poseidon principles, and also to hear about Sea Cargo Charter, which was launched last year. So ship owners are feeling pressure from two sides already, both in terms of their financing and also their commercial trading. Yet the global regulatory body, which is IMO, has, you know, we need international laws for shipping because it's an international trade. So from our perspective, I suppose, as marine insurers, we're saying if we don't provide insurance to vessels going to sea, which are trading legitimately under IMO legislation, who is going to step in? So as responsible insurers, such as the IGP&I clubs, who have good relationships with many of the maritime administrations around the world, who are respected at IMO, who are part of the conversation, is it the right thing to do to allow vessels to fall out of that type of insurance cover when, if there is an incident, who is going to be there to pick up the tab? I'm going to put that to you first, Michael.
Well, I mean, if it falls out, it won't sail. And I think because shipping is no longer going to be about the ship. I mean, I appreciate you insure the hull and machinery, and we're going to take a mortgage if we finance it, but actually the cash flow in shipping is going to move firmly back to the cargo, which is where shipping finance started 70 years ago with time charters. And that's how I think shipping finance will come, particularly with the new technologies. It'll be long-term underpinning cargo, and then hopefully market-based measures on carbon levies and stuff that will sort of have government support to it. Your business decision in the industry is no different to mine, which is you choose to insure a company, a client, a particular ship. I think if you don't insure it, and you can of course use pricing to motivate people, if you don't, someone else will. But if someone else will, and then a bank won't lend because of who the insurer are, the cargo owner is going to be very unhappy because, and I think this is where it's important to think the cargo owner themselves, these big companies, big energy companies, their scope 3 emissions are also under scrutiny from their shareholders and their regulators. So there is a communal interest here, but each of us has to make our own business decisions. And one of the things in finance, we've seen a number of shipping companies adopt the owner's side of the Poseidon principles, which is disclose their emissions consistent with how the principles work. And we've seen pricing adjust to emissions data in order to, which the bond market does too, in order to motivate people to do the right thing. So I don't think, we don't have a responsibility to society to lend to someone we don't want to lend to. And I don't think you as an insurer have that either in your business. If the Chinese state insurance company wants to come and underwrite all insurance for everyone else, good luck to them. But I don't see a problem. I think, you know, as I said, the Poseidon principles is not anti-competitive, because if an individual signatory to that wants to add other environmental covenants in the loan, they can do that. That's not what we're doing collectively as the principle. So I think it's going to be up to individual banks, insurers, and everyone else to sort of set their own standards as to how they want to do business.
James, do you want to sort of give a P&I club perspective on that?
We have the same clients.
Of course we have the same clients. Although I guess, I mean, one of the things I was reflecting on there is, of course, you know, if you look at a club, its portfolio of business, we have whole accounts, we have members, owners, operators who may be entered with 1 or 2 or 3 clubs. Now, from a hull and machinery perspective, I can see the Poseidon principles being of interest in a subscription market where you can essentially dial up or down the type of business or tonnage that you have on risk. But from a P&I club's perspective, we take a far more holistic view. It's about working alongside our members. It's looking at all of the operational facets which are important to them and helping them in that journey. I really sort of resent the idea, or don't like the idea, that we could just simply find another insurer to take on a problem if the clubs weren't able to underwrite a risk. Because, I mean, the strength of the group is that we insure the world fleet, 90% of the world fleet, and within that, we've got knowledge and expertise to help and manage ship owners deal with their problems, to deal with the crisis that necessarily ensue. If you were to make a certain type of ship type uninsurable within the group, that ship is just as able to have $1 billion claim as any other ship. And the consequences of that to the environment, if something goes wrong and an insurer doesn't step up to deal with that, would be significant. And so I really see it as very much a longer transition. The P&I clubs are there to stand alongside their owners to help them make the right choices. But as ship-owned mutuals, we can't be saying to our members, you've got to go this way. Because ship owners, it's like turkeys voting for Christmas. They have P&I clubs that they've put their money into over the years. They've built relationships with. They don't need the clubs telling them what they can and can't do. It's about working together to help them understand the issues and to really help them move forward in decarbonisation. But it isn't just the major ship owners too. Yeah, it's interesting that none of the smaller ship owners were invited to the debate and discussion, because from what you're suggesting, no one's really thinking or caring about them in the future. The reality is there's some really good quality ship owners out there who are privately owned, who need the levels of insurance that the clubs can provide, and over time will be able to manage that transition away from carbon.
From the reinsurer's perspective, Patricia, can you give us your thoughts?
I think that we need to consider a couple of aspects here, right? What is the role of insurance? From strategic position, we make a conscious decision. What are the risks that we want to support going forward? And Swiss Re has got a very clear stand on this. It's not going to happen from today to tomorrow. It's about the transition time and the type of discussion that we can have with our clients. I am sure that you appreciate that if you are a ship owner that is investing millions in alternative fuels, you don't get from insurance any financial incentive compared to somebody that is not doing it. You will not like it. Second role that the insurance industry need to really think of is how we support this transition. Mike was referring to the Getting to Zero coalition. Swiss Re is a strategic partner of the Global Maritime Forum, and I personally work supporting the within the Getting to Zero coalition. There are 4 work streams. Is on motivating first mover, and the discussion is what is the insurance industry going to do to de-risk the transition, because there is a very important role that we need to play there. And last but not least, it may be not of big concern here in London, but in the European Union, as from 2024, any insurance company with more than 500 employees will have to report on the ESG level of their sustainability portfolio. The criteria are not known yet, but you can go from the assumption that in marine emission will be measured. And this is going to be tough. This is going to be very tough for a line of business. And I know what I am talking about, because Swiss Re exited a part of the market 2 years ago, is already under pressure from the financial point of view. If we in marine represent 4% for most of the large insurance companies, we get not only an issue on performance, but an issue on rating very bad on ESG value, then it's going to be really tough to justify why a chief financial officer should have such a problematic line that in the end is only 4%. Right? And it's about us thinking as an industry, marine insurance, how we want to position ourselves within the insurance world.
Thank you. Perhaps we could turn to Magna, just from because obviously Guard has both a P&I entry and also a hull side to the business. So perhaps you could give us the hull side, because we don't have anyone else from the hull market here.
Timing is not actually, because this is going to be decided upon tomorrow in the board meeting. But again, what we, from the management side, what we would propose at least to the board is that we would sign up and be signatories to the Poseidon Principles on our hull portfolio, because we, as you have outlined, both Michael and Patricia, is that we believe that this is something that we should do. We should use, as I said earlier, our voice to be part of it, and we need to start measuring this before this is being imposed on us from the regulators anyway. So it is, but again, it remains to be seen until tomorrow.
So I think maybe moving on to another question, how does the market contribute to changing behaviour in relation to the reduction in GHGs, and not simply push the problem elsewhere? Maybe I could start with you, Cindy, just to give a few comments on that.
Sure, Nick. So I think hearing all the comments of various stakeholders, I feel it's very important for all of us to share the risk of innovative technologies, to transition them to maturity to a certain stage where everybody is comfortable insuring ships with new technologies. I can give an example what we've done at AXA XL. So example is 3D printing. So a lot of ship owners during COVID were not able to fly their spare parts across the world. Flying spare parts is also adding to the carbon footprint. So what we partnered with a few ship owners and also with a consortium was to try and see if 3D printed parts or non-critical 3D printed parts could be tested on ships, which would be closer to hub ports where you didn't have to fly that part across the world on a small box and add to the carbon footprint. Take the risk of testing them on a ship and see what happens. Like I said, it was a risk shared between stakeholders. So everybody in the industry has red lines. Every insurer has a red line that I cannot do in innovative technologies. Every liability insurer has a line that I don't want to test something new which my crew is not aware of or they've not tested or operated over the past few years. So I think it's very important for all of us to get together, understand where those red lines are, and see how much can we stretch them, so that till the time these technologies are mature and till the time everybody's comfortable with it, we need to give them a chance. You can't say, I won't test it till the time it's tested for 10 years on its own. So that's where I feel it's very important. And a role is also played by classification and certification societies, because they are our eyes and ears on the ground as underwriters of hull or liability. We know they are the ones who are testing it. So if we set up a consortium where everybody feels comfortable taking that risk, stretching those red lines, I'm sure we'll get to a stage where everybody is transitioning and contributing to that transition for decarbonization.
What about at Swiss Re? I mean, in terms of internal processes to try to reduce GHGs there, and which is part of one of the questions we have here, and just looking in terms of making sure that we're not pushing the problem elsewhere all the way through the value chain.
We have mentioned the Poseidon Principle for insurance. It's now public knowledge that there will be Poseidon Principle for insurance. Joanna Christensen of the Global Maritime Forum announced it at the IUMI conference last week. And we as Swiss Re have given very active support in the development of a standard for emission calculation together with humans. And it was a lot of R&D work that our Swiss Re Institute did, and we have been actively collaborating to the drafting group. And I think that the Poseidon Principle is really about supporting the industry to create the transparency that is necessary. And also for us as insurance company to make an active commitment towards it. If anybody is interested to know more about about the Poseidon principle for insurance, please feel free to reach out to me, and I am more than happy to share with you more details. But I think that it's really important that we as an industry, we show that we are proactive. Going back to what I just said before, we do not want to be constantly perceived within the insurance world as, let's say, those that are always laying behind. This is for us a great opportunity to show that we are doing now a step forward.
And perhaps I can see that from a commercial reinsurer's point of view, but I suppose, insurer's point of view. From in terms of transparency, I guess you're looking for reporting by insurance companies each year, and then year on year, you're hoping to see an improvement in the emissions of the portfolio that you are insuring. Is that the objective? Would that be the objective?
I think that this is the objective of the world, that we see an improvement toward that 2050 goal, right? This is the general, but this is the ambition. And I have had a discussion with various banks that signed to the Poseidon principle, and it's really about creating a constructive dialogue with our clients on what the trajectory is, and not saying, no, you don't get insurance any longer, but also to create the right financial incentive for those that are investing in it.
But I can see that if the fleet remains the same in your portfolio, that you'll be looking for an improvement each year. But what happens if you take on a different fleet, which skews your figures because it's a slightly older fleet with older engines, which burn more fuel and things like that? Would your aim be not to insure those types of fleets? In which case, where will those fleets go in terms of getting insurance cover?
In the end, it's about balance. It's what you can afford. Also, when we take on new risk, they are eventually not all the best that we can think of, but they are part of the whole. We need to see them within the whole financial performance of the portfolio. And this will be exactly the same thing for what we will do on emission. And then each company will decide on how stringent these targets are, but the trajectory need to be clear.
Okay, thank you. James, maybe I'll put that same question to you, changing portfolios. I mean, where would those ships which were perhaps not able to get insurance cover from Patrizia's company, where would they go for their insurance?
I mean, we've got to assume that where one isn't willing to provide insurance, another market will become available. And I'm talking from a hull and machinery perspective. I mean, certainly from the groups club's perspective, whenever we found challenges around people who are willing to underwrite risks, we've found ways to find other capacity or ways to evolve. I think, I mean, again, I'll go back to the point. I mean, certainly from my perspective, not writing a certain risk type is about pushing the problem elsewhere. It's fascinating that so much time and effort has gone into establishing a principle, and money's been spent on working out emission calculations, when I'm sure if we said that to our ship owners, they'd much rather we spent their money helping them come to terms with new fuels that can reduce their emissions, but also better serve them in other ways. And I think what's driving your needs to change are, of course, your shareholders, the financial institutions that sit behind you. We're a P&I club. We're owned by our members. They are our shareholders. We need to be listening to their needs. They're not coming to us and saying, we want you to calculate our emissions. We want to know how. But what they are asking us is, how do we ensure that we can continue to trade and operate, meet the requirements of our clients, get the high levels of cover that you, the clubs, can provide, but also access the great service to help us when things go wrong? And that's our focus, and that's really where we need to be driving this forward.
I think this is very important what you just said. To my surprise, when we had the first meeting, bringing people together, insurance, reinsurance, ship owner, classification society, when we had the first meeting, I got 2 mails from ship owners who wrote me, just make sure that the emissions are calculated accurately, right? So I am not a ship owner, and I invite others to talk on this.
This is it's a factual thing. It's very important. We would still be talking about the Poseidon principles now if it hadn't been for the data collection system regulation, which came in 18. So the ship owner is required by the IMO to provide that emissions data every year to flag state for verification by class usually, then to flag state, and then flag state to the IMO. I went to the IMO and said, could we have access to your database? Because that would be the simplest way of doing it. I was told no, because it's confidential on the IMO database, and it would take at least 2 years and a 2/3 vote of the General Assembly to change the clause in MARPOL, whatever it was, for them to be able to show. So we decided to go to our clients. We said, please send us your DCS, what you send in for that, please send it to us, preferably verified. So we haven't asked for anything that they aren't already having to provide legally. And that was important. And there are other industries going through a Poseidon Principles equivalent who don't have a global regulator and are having to wrestle with how do we come together to define what the metric should be. So we fully anticipate that, because at the moment the IMO's target is just carbon, CO2. We anticipate, obviously there's NOx and SOx, but also methane at some point. Governments will force the IMO to also require those owners to measure, well, they measure it all, but to actually report those other things. So it's a very important point, because we wanted to not work out the emissions ourselves, or even have the ship owner sort of have to make calculations, do all the work they didn't have to do. So that was a very important thing. And I think that will develop. I also think that the pressure from cargo owners and investors mean that data will become public data on websites within the next 12 to 18 months, because they're going to say, I want to see what that is so I can compare it. And in the end, if one ship owner publishes it publicly, or all will have to. I think the other key difference between the banks and the insurers is we are making long-term capital commitments. And so for us, the issue of, we started somewhere and therefore inherited for alignment purposes the business we'd done over the previous 5 to 10 years. What's more important for the banks is once we make a commitment, short of an owner selling the ship and paying us back, is we have to live with that in our portfolio till the loan matures. So we're stuck with sort of, making quite significant decisions around new technologies and all that. With the Sea Cargo Charter, and I think where the insurance Poseidon principles are going, you've got a shorter term perspective, which enables you to sort of make slightly different decisions. And I think the motivation there is actually more powerful in some way, because you can influence a decision that is made in 1 year's time, as opposed to we have to live with something, for 7 or 8 or 10 years or whatever, that turns out not to have been as clean as we thought it would when we lent the money in the first place. So I don't think you're going to have the same sort of conflict you think you might have, because I think they're your own members, but they will be listening to you and to their fellow members around, well, I did this. But I do think it's going to be, the cargo owners that will drive the market. There's strong view there'll end up being a 2, if not a 3-tier market once EXI comes in, just using those ratings of ships.
Magda, any comments from your side?
Oh, yeah, I think a lot has been said already, and I agree. This is a balancing act. I mean, we, as Standard has pointed out, we're owned by the members, and we are acting on the direction from the board. But having said so, we are in a position to influence and push people, and we should use that for whatever it's worth. And yes, people will listen to us, and we should work together with them. And for the sake of providing incentives, yes, probably, but this is also something that has to find its natural way into the modeling that we do. We shouldn't talk about insurance premiums and rates now, perhaps, but I heard an expression the other day that you can't skin a skeleton, so it's difficult to give incentives in that way. So again, but it is a balancing act, and yes, we should be able to use our voice, definitely.
Okay, well, obviously we've gone through the decarbonisation thing in some detail, but maybe we could talk on how the market is coordinating with the wider shipping industry regarding the introduction of new fuels and engines. I mean, obviously on the P&I side, we are much more looking at the decisions once they've been taken. But I think we also look to the International Chamber of Shipping and IAX and the engine manufacturers to come up with the technology and to be testing those new fuels and to be looking at it. But James, from your perspective, P&I look at new fuels. Do you want to say a few words on that?
Just briefly touch on that, Nick. I mean, certainly from the Standard Club's perspective, alternative fuels has been on the radar for quite some time. We've established an alternative fuels working group, which is very much focused, as I say, around supporting and educating our members. But also, I think it takes quite a different view, and that's one of looking at the fuel and innovation landscape from a risk perspective. You know, as a club, we need to understand how these fuels are going to be used on board ships. We need to know the potential downsides, because we are going through a transition, and as our members go through that transition, they're going to be having to contend with a wide range of technical issues, which none of us know how they're going to pan out. And so the work of that group is very much to work with a range of stakeholders, whether that's industry experts, whether that's the classification societies or other clubs, and even looking at ways in which we can embark upon some small bespoke R&D exercises with members who are willing to work with us so that we can learn alongside them as they make the transition. So again, it's very much that partnership approach, but also looking at it from the long-term benefits of the club. If we want to be here in 100 years' time, we need to evolve with our members and understand the risk that we're writing for them, and with that, the new fuels that they're going to be using in due course.
It's fair to say we're still very much at the R&D, the research and development stage on the new fuels. I mean, certain companies are looking at methanol, there's ammonia, there's hydrogen, but we haven't reached a landing yet as an industry. So, you know, it is fine for us to be pushing for decarbonisation and everything, but those new fuels haven't been tested fully and properly yet. So, and the risk landscape around them has to be tested as well to make the P&I insurers happy, the hull insurers and the reinsurers happy. I think, Sundip, maybe you've got a few comments on that from the marine side. You've been a seafarer. You know, what would you feel comfortable as your new fuel?
Absolutely. Like you rightly said, Nick, there's no clear winner right now. Everybody's trying to test what fuel is going to be the best. Ship owners don't want to have a hold-up risk, invest in a technology, modify the ship, and then find out it's no longer allowed or regulations are clamping down on it. And that's where I feel there's some requirement of incentive alignment, like we discussed the Sea Cargo Charter. Now the question is that if a ship owner wants to test a new fuel at a low speed, is the charter happy for the ship to go at 6 knots and be late on delivery because, you know, online shopping is booming? So that's where I feel there's again a need of incentive alignment. Yes, slower speeds are good for the engines with the right fuel, not with the wrong one. And that's where we all need to sit together and say, okay, let's try it out. Let's try new fuel, slow steaming. It won't reach before Christmas. Are you happy with it? And that's where that dialogue is required. And the other thing is also that supply chain issues are still a big concern for ship owners. You know, you select a new fuel and suddenly you figure out your trade pattern has changed with the global demand changing in terms of what you're buying and what you're selling, and suddenly you end up in a port where there's no availability. Again, a hold-up risk. So all these factors need to be thought of very carefully from our perspective as well.
And having talked to various ports along the way, you know, it's a big logistical setup to put in place the new fuel technology and you know, delivery of new fuels, making sure there's supply there, et cetera, et cetera. And we've seen that with LNG over the last 4 or 5 years.
Absolutely.
So the move, no one's in any doubt there's a move towards new fuels. It's a question of what they are going to be and what the risk profile is going to be off the back of those, very much.
Absolutely. And risk profile, just to give you an example. So I've sailed majority of my career on tankers, and we went through very hardcore training to handle a liquid fuel. And now suddenly you're telling a bulk carrier operator for crew to handle LNG fuel or a passenger vessel to handle LNG fuel. Considering the amount of training which is required for changing fuels, it's not easy. You can't tell them to watch a video online and say, now you're switching to LNG. And that's a risk for insurers, P&I clubs, and also for reinsurers, which we should be aware of, that training need to transition to a new fuel.
And quite a few new vessels are being built with the ability to burn different types of fuel. Again, that's double training because it's different things from what they've been used to. And so I think all of that needs to be taken into account in the risk profile. Patrizia, what about at Swiss Re in terms of looking at the changing fuels and engines and things like that? Have you done much research work in the Marine Department there?
Yes, we are in general about alternative fuel. Swiss Re is looking how we can play a role in supporting this transition. It is going to be also a risky one. And I don't know in other company, but in Swiss Re, we have no underwriting authority to write prototype. The moment that these ships are considered prototype, you are not allowed to write it, according to the standard procedure. And as such, this is why we are at the moment having conversation with a very large shipping register to discuss about how we can try to simulate the risk that we will face to be able to be ready and then be able to provide cover when this type of ships will become really operative, right? And this is a duty that the insurance industry has got, because we cannot sit here, talk about transition and then not doing anything about supporting the real de-risking. Within this Getting to Zero coalition, a part of the work that we do when we look at motivating first mover is exactly how bank and insurance company can play a role in supporting those that will take a huge risk, because maybe you invest in a type of fuel that is not going to be used then. What do you do with it?
Exactly.
Right.
There are large companies doing that at the very moment. And how are you going to ensure that supply chain is going to be on your trading routes? What if the trading routes change? So it's a big issue.
And I think that this is something that the insurance industry need really to make a commitment toward this. If not, we cannot stay here and say, but look, I'm not going to be so keen on insuring very polluting ship if we do nothing to support this transition.
What about at Guard? What are you up to on new fuels?
Well, I think what we can use as an example here is what we did with the Yara Birkeland, which was supposed to be at that time the first autonomous cargo ship in the world. I mean, we went in quite early, and yes, it's a prototype, but every now and again you need to go in, and the reason for us trying to get in early was also to be able to develop a framework together with them. So it's not only the insurers, but it's above all, it's the classification societies as well. We need to trust the engineers. As we heard earlier today, the engineers work quickly, whereas the lawyers work a bit slower. But then again, we went in because this was also good for the greenhouse gases, because it was going to be battery driven, and it was going to remove an enormous amount of truck operations along the roads. And that is the way I believe this needs to work. We need to work in this three-party thing with the classification societies, with the regulators, and with the insurance company. That's where we have, or that's how we have developed over many, many years.
Agreed, Magna, but what about also the regulations that go with that? I mean, we're talking with that particular vessel, it's a trade, cabotage trade, so it's not going overseas. So there's the whole problem with autonomous vessels in terms of the international regulatory framework that would need to change to account for, not having seafarers on board. I think that's a big issue as well, isn't it?
It is, but I was more saying about this now. I mean, that's also why we want to get in early, to be able to influence the regulators. So, but then again, in this respect, it was mainly for being there to be able to also learn from the technology, battery-driven ships. With that goes a lot of safety, and it was said earlier today that it represents a risk to to insurers and to everybody else, but above all, it represents a risk to those people on board the ship, and that must not be forgotten. So it's all about the safety of those on board, first and foremost.
So I think we've probably reached the end of the sort of set questions, and I'll sort of take questions from the audience in a minute. There's one that's come in online so far, which is an interesting one, which is it for the insurance market to push for change or to simply facilitate innovation with nation states, or the IMO and the primary engines for change? So you know, is it really the insurer's job to sort of self-regulate in this way, or should it be IMO led with influence from outside? Maybe I could put that to Sindip first of all.
Yeah, I think it should be IMO led, but there should be influence from us, because we are the ones who know the industry better than IMO, at least on the insurance side. We know where our red lines are, and that's where that dialogue is required.
Okay, thank you. Patricia?
I think that the industry and organizations like the Global Maritime Forum are proving it. It's about trying to self-regulate ourselves before others are coming in. And this is also part, I think, of the duty that we have in the society to give to our children a better world, right? Because in the end, this is the final goal. This is a responsibility that every single individual have got. And as such, I think that being proactive, as the Global Maritime Forum is doing, is, in my opinion, the most adequate path.
And how should that, I mean, should we be following the IMO's sort of initiative, which is really to start with looking to tax on carbon emissions going forward, and the ICS have been pushing that for an R&D fund to really help to drive the push for new fuels? And should we not, as insurers, be getting a little bit more behind that as a first step? Because that would achieve your aim, which is we go to transparency and then a reduced carbon footprint in your portfolio if we get the right fuel. It's a question about getting the right fuel first, isn't it?
You know, Nick, you're putting me a lot under pressure with my Swiss pass. I look towards neutrality to find always a good balance. And I think that it's really part of the social responsibility, and we cannot simply rely on others to do the first step if we are not doing what we can, right? In the end, I think that also as financial institution, we can do a lot to move in the right direction. And I think for me, at least, as a person, it's not enough to say, okay, IMO is not doing anything, and then it's okay.
Yes, sorry, Michael.
I think this call to action asks COP26 to tell the IMO to raise its ambition, partly because if it doesn't, it could lose the role of regulating shipping. And whether it's the EU or anyone else, what may become sort of cross-border carbon tax or whatever, it's not far off that someone may say, well, actually, we're also going to make the equipment on the ship too. So the criticism of the IMO is, of course, they haven't said anything after 2026, even if, in fact, some of the things they came out with in MEPC of 76 were actually not that bad. So I think the challenge for them in MEPC 77 is going to be consciously sort of speeding up and coming out with more detail from what they plan to do after 2026 in order to keep the pressure from the EU and others off from imposing something on shipping. So those like you, like less the banks, but I know you and Klaus obviously work closely with the IMO on many things to make shipping safe and efficient. I think pressure from you will also help, frankly. But in the end, it's a political organization that operates by consensus and moves very slowly. We'll all be burnt to a crisp if we move at the IMO's pace. And that's sorry to exaggerate, but I think the point is they've got to speed it up in order for the investors in those new fuels, which is primarily the energy companies, to actually work out with people like you what the right fuels are and are they insured and everything else. I think the key thing for shipping is to remember that 80% of the decarbonisation of shipping is actually on land. It's the infrastructure on the fuels, not the actual ships. So there has to be progress on the fuels first before the ships. And retrofitting, well, actually, I think there's retrofitting can be done now to reduce emissions, but some of the retrofitting to ammonia or methanol or whatever it is only going to work and be financed if those fuels do actually work and are properly assessed and everything else. But I think we just mustn't underestimate the power of the energy complex to do things. If they're doing the right things, they will spend a lot of money on this, and hopefully the rest of us will ask the right questions, but we'll be able to benefit from them.
Well, it's vital that the energy companies and the engine manufacturers get together, and they are, but it just takes time, and testing these prototypes and making sure they're properly insured when they go to sea is also important. James, did you have any other thoughts on that point?
No, I was just reflecting. I think that sort of it's a fine line between self-regulation and relying upon regulation, as I'm sure was touched on in the sanctions session before this. I mean, it's safe to say, I think if the club's boards determine that the standard club needs to be doing more to self-regulate, then they'll be asking us to do it, and we will be doing it. In the meantime, they'll be looking upon the club as part of the international group to provide that voice to ensure that their views are well heard at the highest possible levels.
Yeah, I think I mean one of the dangers we have in shipping is we get regional regulation and or single countries regulating, so that ship owners actually have to prepare for loads of different regulations in loads of different places. And I think trying to keep things as central as possible through IMO is absolutely key, and certainly the group's position on that. Magda, any quick comments on that or not?
Just I mean, we do not necessarily need to sit and wait for regulations to enter into force. We all know that the Hong Kong Convention, for instance, is going to come into, but it hasn't really been adopted yet. So still, we urge our clients and members to recycle their ships according to the principles of the Hong Kong Convention. So we can still do things before the regulations are entered into force.
And in the end, it will be also the pressure that is coming from the consumer. I know less the situation in UK, but the largest Swiss retailer is going to provide digital twins of any product that you will buy. It means you buy your bananas, and you see what is the carbon footprint that was produced by their banana. And I am sure that especially the younger generation will eventually make a choice toward a greener product. And in the end, we will come all under huge pressure, because we will have not the capacity to serve this type of consumer.
Okay, any questions from the audience? Andreas Biswas from Shells.
Thank you. I was just wondering how property underwriters, how hull and machinery underwriters who sign up to the Poseidon Principles and UN Sustainable Development Goals, how they will manage once the market softens and they have obligations to their capital providers.
Magna, do you want to go on first?
I'm not sure I understand correctly or all what you are asking for there, Andreas, but I don't really see that as being a problem. I mean, we are going through cycles as an insurance company anyway, and we have to make sure that we have enough, let's say, in the bank, so to say, to be able to be there and live by the obligations we've taken on us, even in bad times. Again, I do not think this is what we have talked about, the Poseidon Principles. I do not think that's going to be a massive impact on the way we run. These are figures that are there already. It's all about compiling and reporting them correctly. So I don't think that's going to be a giant step for us.
But Andreas, there is definitely a very important point here. Before I was referring to this EU taxonomy for sustainable insurance portfolio. In that moment, we will have to report on the sustainability of our insurance portfolio. So we will have a reporting on a financial metric, and reporting on the sustainability metric. You can, at least this is what we are thinking, that we align also the performance management of our underwriter in this direction. They will have financial goal, sustainability goal. And in that moment, the pressure is coming anyway, and you will have to make the decision, do you go for the financial intensive, for the financial incentive or the sustainability incentive, right? Swiss Re was the first company that exited coal in 2018. And I remember perfectly, in our cargo port, we were exiting all traders that had more than 30% coal. We had to give up 7 risks, of which 4 were clean record, right? And the underwriter did not like it because they are measured on financial goal, and this was a very good performing goal, but the company made a clear their decision. And so, until then, it was a decision of the company, what is your strategy? But going forward, when we will have to report on it, the pressure will come anyway.
Other questions from the audience at the back? Sorry.
I need to stop sitting at the
That's
back,
it,
giving you
that's
so
it.
much exercise. Yeah.
Identify yourself.
Good afternoon. So Neil here from Lloyd's Register. Just a quick observation. I guess the pandemic created a sort of a burning platform for society, and the pharmaceutical industry and regulators achieved incredible reduction in the life cycle time to deliver new vaccines, 10 years down to 1 year. And I draw the parallel. I guess the challenge around climate change is it's a chronic kind of escalation of impact on human life. It's not as acute as a pandemic, but I'd ask and apply this question to ourselves as Lloyd's Register, as a class society. Is it reasonable for us all to be seeking an order of magnitude change in the pace at which we innovate to address those challenges? So the question is that reasonable? And have you some examples in your own areas of domain expertise where we could strive for that level of acceleration of change to address the clear and present danger of climate?
Just talking in general, not marine specific, then I'll probably come to marine. Our capital investors are looking at us saying that, yes, we are insuring properties, or we are insuring ships which are emitting carbon, and our footprint is quite huge. And on the other side, they are saying that you're paying out claims which are far greater than the profits you generate due to global warming. So we are paying flooding claims, we are paying global warming claims, whereas the margin which we are making on our pure underwriting is reducing and reducing because these payouts are going up. And that's one of the reasons why we are being asked to accelerate our ESG strategy going forward, that we can't see this depletion happen on our profits while we pay out on the other side, and it's all connected. So AXA is a multi-line insurer, so we can implement changes across multiple products, unlike a monoline marine insurer who sees themselves as writing marine. So for us, it's fast-tracked. So whatever you implement on the property side does come to marine. There's no hiding for us, and it has its importance in our strategy, definitely.
Does anyone else want to talk? Phil.
Thank you. Phil Parry from Spinnaker. Just in contrast to Patrizia's last comment, I've spoken to a number of chief underwriting officers in the hull market recently who've said to me that they're being driven by targets by the accountants behind the capital to take on risks that they might otherwise choose not to take on. And so a lot of the talk we're having today about doing the right thing assumes that the insurance company is an individual human being with the ability to make a choice, but the individual underwriters don't necessarily have that choice. And I'm just wondering if the panel, we don't have too much in the way of Lloyd's and company underwriters on the panel, but I'm wondering if the panel recognize that as a pressure, which actually militates against a lot of what we're talking about.
I have to say that personally, we have and this is one of the reasons why I work for Swiss Re, there is a very clear direction there, right? Very clearly, there are cycles, we follow different strategy regards financial incentive. Sometimes we are more top line driven, sometimes less. But on the ESG alignment, our path is very clear. And we know it is a strategic decision because we make an assumption that the world is going in a certain direction. It's not only because we think it's the right thing to do, right? And it comes with a risk because it is a choice. There are parts of the world where if you talk about decarbonization, it's not so popular. And as such, I think that it's very individual from company to company where the company decide to put the focus.
Thank you. What about AXA XL?
AXA XL, in terms of, like you rightly said, that new risks, the marine insurance industry is so old that underwriters are very, ring fence in what the appetite is. And definitely, you're right that there are new technologies out there which are coming out, which we know are going to be green. And the company does tell us to try and take a risk. But as long as the risk is calculated, we're not putting down 100% capacity, we're sharing it. There's self-retention by the client, then we do take that risk. We are under no pressure to say yes from the management unless until we're really comfortable. And that's where that dialogue helps and the risk sharing helps.
Any comments from this side?
Yeah, I can mention from our side is that we don't have external shareholders as such, even though it's a commercial line we do on the whole side. But we are very much there that if we want to shy away from something, we can do it. There's no push as such to increase the top lines. So we are very much on our own in that respect and can do what we believe is the right thing to do.
Yes.
So just a quick question, and to build on something that James was talking about, the risk, I suppose, in terms of future fuels. I remember a little while ago, I was totally out of my depth moderating a session on how the marine insurance market had adapted to the sulfur cap. And one of the key areas of risk that was identified by the panel was the uncertainties from an ecological perspective of low sulfur fuel in the context of a spill. Now, one would have thought in terms of future fuels, that uncertainty is much, much higher. And I was wondering if there is any work being undertaken to try and assess what that risk may look like from an indemnity perspective, I suppose, to try and enhance your businesses.
James, it's probably one.
Yeah, I think the short answer is yes. I mean, when we think about these things, we aren't just looking about underwriting a risk. We also, as clubs all do, we provide claims handling service. So we need to understand the conditions our members are trading in, where they're trading, and importantly, the technology they're using and the impacts that could have on the claims handling cycle. So part of our working group is very much aligned with understanding these technologies. And it's not just the risk, the underwriting, the loss prevention, it's very much the claim side too. Because if we're faced with a situation and we don't understand the consequences, or if there aren't experts who we know we can call upon in those situations to help us out, then that's not going to be good for the marine environment. And it's very much our role to support and assist and protect the environment and work alongside our members.
Part of the problem we have, I think, is that the industry hasn't yet landed on that new fuel, and that's where we're struggling. I mean, we had wind to coal to oil, which is all fairly straightforward in terms of there's only one choice where we're going. I think part of the problem for owners at the moment is they just don't know where it's going. So they don't know where to invest, and they're having to hedge their bets when they make their investments. And that's really, really difficult.
And I think you're right. And this panel was after the sulfur cap was implemented, and still the level of uncertainty in the context of the ecological damage that low sulfur fuel could do was significant, I suppose. And when you think how fast the industry is going to have to move in terms of the adaptation to new fuels, having answered those questions and being able to do it in short time, I'd have thought it's really important for the clubs, to be honest with you, to protect yourselves moving forward.
I think we're just about out of time, Joss. So if you finish on time, we can duck that last comment. But I'd just like to thank the panel for a very interesting discussion and some really interesting views coming forward. And we'll be all watching very closely as to how these issues develop over the next few years.
Thank you very much.
Thank you.
Nick, thanks very much. We've got a short interlude now for 15 minutes, and then we will return back for the last session of the day. Nick, panel, thank you very much.
Thank you.
Because tomorrow